funds also available, capital protected funds, money market funds, voluntary pension schemes. So all the investment products which one can find on the conventional side are available on the Islamic side. In terms of market share, I think I will rather talk about the market share of the Islamic mutual fund industry generally rather than talking specifically about Al-Mizan. And what we have seen is that in 2003, the market share was under 2%. And in the last almost 9 years, or maybe inshallah by the end of this year, we're completing 10 years, the market share has gone up from 2% to almost 14%. And I'm quite hopeful, inshallah, that by the year 2020, the market share of Islamic funds will increase to something like somewhere between 22 to 25% of the overall industry. Because what we have seen is after the 2008 financial crisis, there has been more inclination on the part of the investors to go for the investment products which are which actually where the risk is managed well and there is more diversification. At the same time, there is less leverage. People are concerned about the risk, and because of this flight to safety and the aversion to risk, what has happened is that because of the Sharia structure and the guidelines, the screening guideline that we follow, there is a cap on the leverage on the companies where we invest in. So there's a limit on the leverage, and because of that, we have seen that the returns, as Dr. Imran Ismaili also mentioned, KSE Mizan Index, which was launched 3 years ago. And if you look at the performance of the conventional index, KSE 100 index compared to KSE Mizan Index, then in the last 3 years there have been 12 quarters, and every single quarter, the return on the KSE Mizan Index has been higher compared to the return on the KSE 100 Index. So I'm quite hopeful that certainly with the population, or as I earlier said, more than 96% of the population Muslim, certainly our benchmark is that 96% of our financial system should be Islamic, but certainly we have a long way to go there. But inshallah, we are all collectively working towards that, and I'm quite hopeful that over the years, the penetration of the Islamic products, both on the banking and the takaful and mutual fund side, will increase tremendously. Thank you.
Thank you, Shoaib Saab. Mohammad Saab, we see tremendous growth in the Sharia-compliant funds, as Shoaib Saab mentioned. How do you see your business growing and changing over time, keeping this sort of projection or this growth in mind?
Yeah, thank you very much for giving me this opportunity. We see, as I mentioned in my presentation, we did a survey of the market, and we found that the demand and the need of the market is quite huge. And I think it's one of the fastest growing business line for us to go in the Islamic fund market. For this, we already have, actually we are the second largest player, but by far a bit distance from Mizan. But still, I think we have the largest growth we are seeing is in the Islamic fund market for us. And I think we have certain offerings as well, which are broad offerings, especially in the cash fund and the sovereign fund. Plus, we have a composite fund, which is a balanced fund, Sharia compliant fund, which has done very well. And our pension fund schemes are also doing well. So I think we see a huge potential for us. We basically, our more AUM is on the conventional side, but 20% is right now Islamic, and we see growing into 30 to 40% in the next 2-3 years. So we see a lot of potential, especially on the retail, and we feel that on the retail side, Islamic funds are very well positioned because the alternatives are very few, and the market is quite huge, and the alternatives are very few, and the product returns have been of the Islamic fund market has been very good. So there is a national inclination, and especially we have also got very good response. We are the only bank in Pakistan which distributes funds in the Middle East, and we launched this 3 months back, and our largest selling fund is our Islamic saving fund, which is our sovereign fund, and there's a huge demand there, and I think there is a lot of opportunity. Globally there is a lot of opportunity to invest in Pakistani funds. Especially recently we got a query from a Western country that they want to invest in the retirement schemes, halal Sharia compliant schemes, and I think they evaluated our schemes and they found it very suitable for them. They're going through their own regulatory because they're not really the retirement funds they invest in their own national schemes or which are acceptable for the tax, or they're working on something which can allow them. So there is a lot of potential. I think Pakistan, especially the mutual fund industry as in the Islamic, I think it has got huge potential and they're attracting a lot of investment from outside Pakistan as well. So there's a lot of hope, and inshallah we'll do very well as an industry as a whole.
Excellent. In fact, that was very promising. Farid, you're also in the industry. You're also running an entity. Some of the points that Lisa just mentioned. How do you see? And I've heard that recently you launched a Sharia compliant fund as well. Okay, so how do you see what's needed to sort of take this now to the next level, something different in terms of product? Where do you see things going along those lines?
Thank you very much. Assalamu alaikum. That's true that Able Asset Management have made a recent entry into the Islamic segment. It's almost, I think 2 years now, almost 2 years since we first launched an Islamic fund. And interestingly, it was the first Islamic product from the Allied Bank platform, because Allied Bank does not have an Islamic banking arm, so it was the first product under the Allied Bank's umbrella. And it was a resounding success. The fund size has almost tripled in the last 2 years. So that sort of gives you one idea about the demand and the growth prospects of this segment. And I believe my fellow speakers have already elaborated on that. I would just like to make 2 more points. Firstly, just taking from where Shaib pointed out that in the mutual fund industry, the Islamic segment has almost 14-15% market share. And interestingly, if you look at the banking segment, the Islamic banking segment as part of the total Pakistani banking business is just about 8-odd%. So you can already see that in the capital market side, on the mutual fund side, the size of the Islamic fund industry is almost double that of the Islamic bank. So in terms of relative growth, on the mutual fund side, the Islamic segment is growing very fastly. It's almost twice the size now as compared to the Islamic segment on the banking side. And I think the main reason for that is on the distribution. As Mir also explained that UBL fund managers has Islamic product, Allied Bank has now an Islamic product under ABL Asset Management. And what availability of these products at the branches of the banks has brought the mutual funds Islamic products at the doorstep of a lot of investors, whether it's in the urban areas or in the rural areas. Previously, that distribution platform was not available on the capital market side, and I think that was the primary reason why, despite having a huge demand on the other side, we were not able to capitalize on that prospect. But as more and more asset management companies are now coming up with Islamic products, as more distribution channels are opening up, we will see that the penetration of the Islamic segment will continue to grow. Because I think that it is a given that there is a huge demand for this product in our market. But capitalizing on that demand by bringing through proper product development, by bridging the gap between the investor and the services, that is the key challenge that the industry now faces. Because up until now, the asset management companies, considering that they are relatively small in size compared to traditional banks, we have limited distribution resources, we have limited sales force, we have limited advertising budget. But when we try to leverage on the bank's platform, that's when the whole new universe opens for us. So I guess we have made the first step, we have taken a very positive step, but in order to capitalize on that and to grow, the distribution side would be a very key factor, and the other factor would be product development and bridging the gap, information gap between the investor and the product. Those would be the key 2 challenges, and that's where I think the Sharia advisors, the asset management companies, and the banks or the distribution companies will need to work in order to achieve that goal.
I'm just very, very curious. Obviously, Shoaib Saab is running a company that's dedicated Sharia compliant funds only, whereas Mir Saab and Fareed Saab have a company that have both. And especially, as Fareed Saab mentioned, that your distribution channel is obviously through your bank, your ABL, which, as you mentioned, has no Islamic arm per se. But yet, you have seen tremendous growth in this fund, and I'm sure Mir Saab would probably agree to that statement as well. What is it that brings these people to this fund, whereas they're banking with a conventional institution, but yet, when they come for the funds, they wanted something Sharia compliant? I'm just very curious, because being in, sort of working in Islamic finance and takaful and this and that, you always get this question, and this came up in the morning as well, that there's a hardcore portion who will take nothing but Sharia compliant, and then there's the portion that will say, if it says Islamic on it, we don't want it. But mashallah, what we're hearing here is there's somebody out there that is willing to take it, although they're doing conventional banking, they have no objection to that. But yet when it comes to these funds, they seem to be going very much on the Islamic side. Is there something that maybe we can learn from?
Well, to be honest with you, the investor or the client was always there. It was just a matter of providing the right product through the right platform to them. And I think that's the beauty of the Islamic finance, that it has an inherent buy-in from the investor already. You just need to perhaps make the product available and at the right platform, and people readily accept it. So in our case, we see that somebody who has been always banking in a conventional bank walks into a branch and says, "You have an Islamic product. Why didn't you tell me before that?" And he very conveniently switches. And for the bank, at times it does create a conflict, because there is a notion that at times it leads to cannibalization. But at the end of the day, the assets under management for the whole group, they remain constant, whether it's at the investment management company or at the bank. And that gives the branch managers and the distribution partners an extra product which they feel is very easy to sell, and at the same time has very ready acceptability in the market available. So just to give a short answer to your question, I think the customer was always there. It was just a matter of providing the right product to them.
Give you an example. If you go into a restaurant having a cheeseburger and then you order a Diet Coke, basically. So there is no substitute for the cheeseburger. For Coke, you have a Diet Coke. So if someone enters a branch and their intention is, there is an alternate available, they'll pick that alternate. I think mostly that's what has happened, really.
I would like to add another perspective to it, and actually I would say there are different segments of the market. There are people who would go for Sharia compliant product, even if they are able to get a slightly lower return, they would still be going for that. And then there are people who are focusing purely on the return, and that is another segment, and irrespective of whether it's a Sharia compliant product or not, they will go for it. And I'll just take you back in time to 1996 when we launched our first closed-end fund, Al-Mizan Mutual Fund. And initially we had roughly about 1,000 investors in that fund. And obviously at the end of the year, when you get to the shareholders register, we first noticed that when we announced our first payout, there were roughly about 4 or 5 names, which were non-Muslim names in that fund. And in the next 1 year, what we saw that the number of those non-Muslim investors, mostly Hindu investors, increased from 5 to 50. So although they had no love for Islam or no Sharia reason for them to invest in that fund, but just because of the performance of the fund, they invested it in, and certainly they live in a community. Minorities normally live in a community. So the word spread and they invested in it. So I think there are different segments of the market.
Thank you. Captain Jamil, how do you see takaful playing a role in the growth of Sharia compliant capital markets?
Thank you, Azim. Bismillahirrahmanirrahim. Takaful is one of the late starters, as was earlier also in one of the sessions was mentioned by Shoaib Saab. It really took off in 2007 onwards. Currently, takaful is about 2% or so of the market share in insurance. My vision for the future would be not just for takaful, but for all the Islamic products, that we should live to see the day very soon, for that matter, when the prefix Islamic should no longer be needed. It should be that mutual fund, so by implication it would mean all funds are Islamic in the Islamic Republic of Pakistan. This morning We heard the Commissioner of Insurance, Mr. Asif Arif, also pointed out that is there enshrined in our Constitution of the Islamic Republic, in the Objectives Resolution, and also it is our belief as Muslims that Islam does have a viable alternative and a viable solution to all our present-day needs. And it has been manifested since this morning. We have been hearing, we have been also seeing very impressive figures, whether it is Islamic finance, Islamic banking, they have come of age. So there is no reason for the regulators not to fix a deadline now, maybe another 12 to 18 months, and that period also should be a run-off period for conventional finance industry. But thereafter, after that deadline, all its products, whether it is banking, it is funds, or it is the kafil, it has to be the Islamic way. So we will not need to differentiate what is the kafil and what is conventional in a country where we have 97% Muslims. But still there will be competition amongst the different Islamic fund managers, amongst the different Islamic insurance operators, the different Islamic banks. And people will have a choice also at the same time, and quality will be there, as has been mentioned by Umar Ansari Sahab also in the earlier session. There will be more focus for corporate governance. Maybe we can start up those ethical practices, and we can have that transparency level which is unheard of elsewhere, because we are predominantly Muslims. It is part of our constitutional also, and it is also obligatory on the regulators to make sure that this is done. One aspect that was mentioned also, I think, in the just previous session was regarding commodity exchange. That is an area I believe Islamic investments, Islamic funds, they have to look at because I feel there's a lot of potential there in future. In Sri Lanka, Amanat Kafil, one of the Islamic institutions,